If you want to build real wealth, the biggest mistake you can make is investing in the wrong order. Most people don't fail because they don't try. They fail because they follow the wrong sequence. They buy stocks before learning the basics, chase crypto before building savings, start trading without building a foundation, and jump into high-risk investments before securing their financial safety net. Today, I'm going to show you the smartest, safest, and most proven step-by-step order to invest your money, no matter your income, your job, or your financial situation. And by the end of this video, you will know exactly where every single dollar should go from the moment it hits your bank account. This isn't motivational theory. This is the actual blueprint used by wealthy people, financial planners, and investors who grow their money consistently without gambling or guessing. So let's start from the very beginning. Whenever you earn money, whether it's a salary, freelancing, business income, or even pocket money, the very first step is protection, not growth. People think investing means immediately buying stocks or crypto, but that's step 4 or 5, not step 1. Step 1 is making sure you never go backwards financially again. That means before you invest a single dollar, you need a buffer between you and financial disaster. This buffer is an emergency fund. It's not sexy, it's not exciting, but it is the foundation every wealthy person builds before investing. An emergency fund prevents you from selling your investments at a loss whenever life hits you. And life always hits. Car repairs, medical bills, job loss, sudden expenses, and things you cannot predict. Without an emergency fund, you are forced to pull money out of your investments the moment you start to struggle, which destroys long-term growth. Your emergency fund should start with at least 1 month of basic expenses. This includes rent or mortgage, food, utilities, transport, and anything essential. Not luxuries, essentials only. You don't need to hit 3 or 6 months on day 1. Start with 1 month. Then as your income grows, build it to 3 months. Once you have that buffer, the next step is eliminating high-interest debt. This is where most people ruin their financial progress. You cannot out-invest high-interest debt. If you have a credit card charging you 25% interest, but your investments return 8%, you are losing 17% every year, even if you invest perfectly. It's like filling a pool with a giant hole at the bottom. It doesn't matter how much water you pour in, the pool never fills. So before buying assets, before chasing returns, your next dollar should go toward paying off anything above 8% interest. Mortgage, student loans, auto loans, these are usually low interest. Credit cards, payday loans, personal loans, these are wealth killers. Destroy those first. Once you have an emergency fund and your high-interest debt is gone, your next step is something most people skip: investing in yourself. This means skills, courses, certifications, training, and anything that increases your income. The truth is, you cannot invest your way to wealth if you don't earn enough money to begin with. Increasing your income by learning new skills has the highest ROI of anything in your financial life. If you double your income, you can invest twice as much, save twice as much, and grow twice as fast. The wealthy don't rely on one income stream. They build skills that expand their financial power. So the smartest order includes strengthening your earning potential before scaling investments. Now that you have your foundation built, this is where real investing begins. The next step is automatic investing into long-term, low-risk, proven assets. This means index funds, ETFs, retirement accounts, or diversified portfolios. These investments don't require timing the market. They don't require trading experience. They don't require watching charts. They simply grow with the economy over time. The S&P 500 has returned an average of 10% per year for decades. That means your money doubles roughly every 7 years without you doing anything. Wealthy people rely on predictable long-term returns, not gambling. Every month, invest a percentage of your income automatically. Don't wait for the perfect time. The perfect time was 20 years ago. The next perfect time is today. After building your long-term base, you can move to medium-risk investments like real estate, side businesses, or dividend portfolios. These give you income, not just growth. Income-producing assets are what separate the wealthy from the average person. Growth assets make you money later. Income assets make you money now. But these only make sense once you have your emergency fund, your debt eliminated, your self-investment strong, and your long-term base built. Real estate requires responsibility. Businesses require effort. But when done in the right order, these become powerful financial engines. Once your long-term and medium-risk investments are established, then, and only then, should you touch high-risk investments. High risk doesn't mean reckless. It means anything that comes with volatility. Crypto, tech startups, individual stocks, new business ventures, angel investing, optional trading, and anything with big upside potential, but big downside risk. These can multiply your money dramatically, but only if you can afford for them to go bad without destroying your life. High-risk investing is like spice in cooking. A little can enhance the experience. Too much ruins the dish. Never invest emergency money, rent money, or essential money into risky investments. Only use level 5 money, money you can lose without panic. As your income grows, your investments grow with it, and eventually you reach a point where your money earns more money than you do. This is called financial freedom, and it always follows the same pattern. Protect first, stabilize second, grow third, multiply last. Your dollars become employees that work for you 24/7. The smartest investors aren't the ones who take the biggest risks. They are the ones who follow the smartest order. Income, emergency, debt, skills, long-term investing, income assets, high-risk optional investing. If you follow this exact order, you will never go broke, never go backwards, and never have to restart your financial life. But here's the secret most people never understand. The order protects you from yourself. They follow a boring, proven, step-by-step financial sequence that works in any country, any income level, any economy, and any age. Wealth is math, not magic. And when you follow the smartest order, the math works for you. If you start today, even with small amounts, your financial future changes forever. You don't need a huge salary. You don't need a business degree. You don't need rich parents. You just need to follow the right order. And every dollar you invest in the correct sequence becomes a seed that grows into financial freedom. So the question is not how much should I invest, but what's the smartest place for my next dollar?